Jeff Rosenberg, Jason Furman up at Harvard teaching Act 10 with my tweet of the day. I love his single sentence observation. I feel like I could be confident enough after 2 more jobs CPI prints. May I suggest that Friday at 8:30, we and the chairman will readjust?
Yeah, I mean, look, he wants to delay here, and there was something that he said that I think hasn't been picked up on, which is the decision to begin cutting is of great consequence. And then he also said earlier, because of that, or because of that concern, there's no need to rush. So waiting for more data and kind of the pushback on what more data do you need isn't really the story here. I don't think they need more data. He kind of said that. We have confidence. We just want even more confidence. I really think they don't want to rush into it. Jonathan Farrow, you asked me after the last payrolls, what is my expectation? I said, June, mainly because I don't see the rush here. And I think that's the story. Is it May? Is it June? It's not March. It's pushing back because they don't want to rush into a cutting cycle.
Data still looks okay. Payrolls might change that on Friday. For you right now, in this market, putting money to work, what are you advocating for?
I think there's a lot of hemming and hawing today, tomorrow, around the timing of when do they go. But I think if you take a step back from this inside baseball story, the broader story is the Fed has won the battle on inflation. Not totally certain, where we settle in there, but certainly they can begin a cutting cycle. And the growth side is much more positive than what we had thought, particularly when we thought that interest rate sensitivity was going to be greater and recession much more likely. So I think this is a backdrop that is unchanged for taking on more risk in portfolios. It's a better outlook. The credit markets, despite some of the news today in terms of the banking sector, that's particular to commercial real estate. And that is something I think we have to keep an eye on. But you look at the corporate side, you look at the consumer side, it's very strong. And the credit markets here, I think, are strong. There's not a huge price appreciation opportunity, but I think the yield opportunity that you can capture there without the risk of the downside of inflation, of recession, is still the story here.